What is going on, everyone? In this video, we are going to go over the one single stock that you need. You can trade on it. You can do every strategy out there on, and it's the only thing that you actually need, whether you have a $100 account or you have $1 million account. So with that being said, let's go ahead, cue the intro and jump right into this one. Okay, guys, we have actually talked about this one many times. It's the S&P 500, but there's a couple different ways to do this. So, and what I mean by that is you can trade the S&P 500 ETF, and there are many of these ETFs. SPY is the most popular. It is the one that I choose to use, and it's very liquid. So we continue to use it. Now, with that being said, the best part about this is the fantastic track record. The more I continue to scroll out, the more down to the left it goes. So that means in the future, it goes up and to the right. Now, obviously, I'm not a financial advisor, and past performances do not mean that it's going to continue to happen. Things happen, economies fall, a million different scenarios. And I'm going to talk about something that nobody ever wants to talk about. And I think it's very interesting, actually, because a couple of my friends and my wife and I were talking about this the other day, is how can the S&P 500 fall dramatically unless the big whales actually take their money out, the Citadels, all these others? Because most Americans have a 401k. And where does that money go to every single week? Because this tracks the S&P 500. So if you want to see the actual S&P 500, it is SPX. So we go here and look at that. The chart did not change other than this column over here on the right, which is the actual dollar value that it's worth. Again, it's just on a smaller scale. Why is it the best? Liquidity. People keep putting money into it every Friday or every other Friday when they get paid, whatever the case may be. Their 401ks basically dump into this thing over and over and over and over. They're putting all this money in, and then the people that are retired are only taking out a certain small percentage on it. And they have to pay taxes on it, so they want to take out the least amount as possible from this and keep their money growing. It's a trap. It's like being in the rat race all over again. It's a trap. They don't have to pay taxes on it. You can loan against it if you get to a certain amount. All those things are possible. But why do I love it? Because I will never sell a share of this stock. And instead of me owning SPX, I actually own SPY. And I've set it up this way because it is an ETF. It's got a very low maintenance requirement, not maintenance requirement, but an actual where their fees are very low. So with that being said, I can sell options against it, and selling covered calls against this has been absolutely amazing for me in my life. And I'm just super grateful that I've been buying this stock for the past 10 years. It's been absolutely amazing. It's been something that when I started to make money, I didn't change the way I lived, and I just kept burying money into it. If you are 18, 19, 20 years old and you have that opportunity, it'll pay extreme dividends and cash flow later if you can get up to a couple hundred shares of it, or if you can get up to just at least 100 shares, you'll see that your income can actually quite increase very dramatically based off certain things. So with that being said, let's go into their options. So we do, right? And the more money I get, the more, when the S&P 500 dips, like these couple patterns here, I sell more options against it. It's actually one of my favorite stocks of all time. It's not a company. It holds the best 500 companies instead. So I'm diversified without being diversified. Their options chain, though. So we're using Yahoo Finance right now because the market's not open. I'm recording this on a Sunday. We're going to the 15th, roughly that 45 days out. Now you can go a week out. So, but what I like to do is, the only thing I don't like about Yahoo Finance, guys, is it doesn't give you the delta. So if you want to know my delta, normally it's around a 20 delta, meaning 20% probability. of losing, basically. So it means they have an 80% chance of winning. Statistics. Learn statistics. What best thing you can do for yourself if you're managing money or your own money or whatever the case may be, because statistics will tell you a lot. Now, there are outliers and you have to have a safety net. What I do, and I'm not going to go into it full depth in this video. What I do though is I do buy a VIX hedge. I buy VIX calls, very, very long dated and slightly out of the money. And it has helped fantastically for me. I'm literally betting that they are going to go to zero, but I'm making enough money on the front side that it covers that. It's like having an insurance policy on your portfolio. Fantastic. Not everybody does that. Again, do your own thing, know your own risk tolerance, things like that. I know mine. I have set data sets in my portfolio that we follow. A certain amount of money allocated means a certain amount of VIX calls. Pretty simple. I tried to keep it super, super simple. So again, VIX options, I'm probably in this case, probably trying to sell around a 700. If I can get out even lower, so you are seeing here, you're not going to get anywhere near probably that low, but what we can do is we can get into around 715, probably running here 718, 716. So that means you are all the way down here. You notice that those numbers get dramatically changing on the bid and ask over here and what they're trading in based off of where the last recent lows were. You'll realize that really fast the more options you sell. Now, everybody's instantly going, that's $744. That means I have to have $74,000 and some change in order to trade this. I'm going to show you a cheat code that nobody ended up showing me, and I had to find it out on accident when talking to a broker when I was around 20 years old. You can sell what's called a credit spread, and it is an absolute cheat code if you're doing it enough and having law of large numbers. That's where if you have a $100 account, you can do this as long as you're doing a $1 wide spread. So what are we going to do here? We're probably going to find one right around in here, 720-ish range. Now, this isn't giving me actual real prices. So again, it's after hours, but I'll tell you, normally you can get about an 8% return on these consistently. I don't even let them go all the way. So I'm looking for about a 5% actual ROI on that cash, on that spread pretty consistently, but I'm not going to be expecting it to wait 45 days. I'm normally out within 20 days, so it actually compounds faster. Always be compounding. It's Warren Buffett, one of the laws that you should never break. Don't quote me on that. Horrible at that stuff. So, but I will get in here at like a 715, 716, and I will sell the spread. So if I'm usually you're getting about an $8 for the spread. So you're locking up 100 because there is a $1 spread in between 716 and 715. You're going to put up $100 in collateral. You're going to sell that option for about $8. If IB is high, maybe $9 or $10, meaning a 10%. I'm not looking to collect all 9, 8, 10%. You know, I'm looking to get, like I said, my 5 to 6%. I'm going to cash out of these way sooner because the closer it gets to expiration day, the more game risk I have. And actually just the laws really, really hurt your numbers strategically. And the more money I make on that strategy is the more money that I can compound faster. So if I have 10 of these going on a month, then I'm making an extra probably 70-ish bucks, $60 to $70 off of $1,000 in collateral. If I'm doing 10 of them, that's a pretty good return, actually. That's like fantastic. That's what people do in a year. And then I can turn around and do it again. Now, because I do this myself and I would rather help as many people as possible, the one rule I have is once it gets to the amount of premium that I sold it for, if it doubles, right? So if I sold it for 10 cents, then I'm collecting $10 for every $100 that I'm putting into it. If it gets to 20 cents, meaning the stock market fell, I always want to make sure I have enough cash. I'm closing positions once it gets to basically the same amount of loss that my credit was. So $20 at this point, I'm losing $10 on this trade. And then I'm instantly going and I'm going to go sell another one because that means everything dropped and I'm instantly going back the other direction. Guys, I hope this actually helps somebody out. This is the easiest way to make money out there. There is always risk. So again, know your parameters, know what you're doing, but this is a way to get started selling premium. If you don't know Tom Sawzoff, look him up. Fantastic platforms. This is another way to start generating income with very, very small accounts.